Hey everyone, I'm Jeremy Saffron. This is Kitco News. Don't forget to hit the subscribe button. Well, let's jump right into the precious metals market as gold continues to trade near record levels and silver sees its strongest performance in over a decade. Now, gold futures recently broke through that $2,700 mark, reaching new highs, driven by, of course, escalating geopolitical tensions in the Middle East. We have uncertainty around the Russian-Ukraine conflict, and then, of course, broader concerns over the upcoming U.S. elections. Now, the Fed has also hinted at rate cuts, but the pace might be slower than many expected. These factors could all contribute to the strong safe haven demand for gold. Now, on silver, we're seeing December silver futures trading above $34. Now, it's the highest price in 12 years. Our next guest you know very well, Gary Wagner. He's the editor of thegoldforecast.com. Now, Gary's been spot on with his calls. The last time he was here, he accurately predicted that gold would break through that $2,700 mark, then retrace, which it did exactly as he said. Gary, welcome back to the show. Great to have you on.
Thanks. It is great to be on. And what an exciting market we're witnessing. This is history. Without a question, we are looking at a point in time that will have stories to tell our grandkids years down the road about remembering when gold broke through these milestone numbers.
Yeah. Not to mention silver obviously getting a little push too, but we'll get to that in a minute. Gary, let's talk about it. I mean, as I just said, last time we spoke, you accurately called that these futures were going to go above that $2,700. I mean, we've had these escalating geopolitical tensions, and then we had a small retracement, some profit taking. Obviously, now we're seeing this Middle Eastern conflict widening, and there's more uncertainty around Russia and Ukraine continuing. Gold's been holding quite steady here. I mean, talk to me a little bit about what's driving the prices higher and where the testing resistance is.
Perfect. Absolutely love to do that. The first chart to illustrate that point, and let me pull it into a full screen mode, is a weekly Henkin-Ashi chart. It differs from a standard candlestick chart in that the open is fixed from the midpoint of the prior session. So on a weekly chart, it'd be the prior week. It averages out or smooths out the noise. And so what you look for in a dynamic trend like we're witnessing is solid, long, continuous blocks of large green candles. And that's what we've seen. The rectangle really marks the beginning of October last year. That's when we had gold trading just below 1900. We've seen it surge 40% from all of the reasons you just spoke about. And then there's a little issue in Taiwan going on also that could be interesting down the road with Chinese activity in the seas there. But what I want to say is this. I firmly believe in terms of where gold will go, it is going to be significantly higher. There will be peaks and troughs, obviously, but from this chart, that trend is strong. And that's the point that I want to make. And this is a standard candlestick chart. So in terms of really what we're looking at today, it's all about the dollar. You've got the dollar gaining significantly. Any of the losses we're seeing in gold are directly attributable to dollar strength. And that brings me to our basic forecasts and what we're looking at. And the primary chart that I typically use for my study. And as you said, yes, we were looking for gold to touch 2,700. That was precisely what we did. And this was at what we're calling a long primary third wave. A shallow correction we predicted could go to either 2635 or 2590. It took the easier path and only broke to 2635. And then we've steamrolled now past 2,700, record-breaking day Friday, followed by, whether it's consolidation today, it's just dollar strength. So when I define the path to getting to where I believe this rally will terminate, I have updated our numbers. And It's based on the fact that I believe fully that we are in a final fifth wave. It's a primary wave, and there will be a series of rallies, waves 1, 3, and 5, interrupted by basic corrective periods or sideways trading action. Even if gold were to go down here, I wouldn't expect it to go any lower than 27 and then return. But I'm exceedingly bullish. There are so many factors combined driving gold higher that I've revised my end of the year first quarter target now to 28.65 based on the fabric of geopolitical concerns and the technical aspect being a extended fifth wave, which is why I've updated from our earlier call, which was about 2,800.
Yeah, wow. Okay. Well, I mean, like you said, it's been a record year. We'll get into the technicals from a second, but from a macro perspective, I mean, you're talking about these geopolitical situations. If we do see progress, in diplomatic negotiations, hypothetically, could we see, a pullback in gold futures? Could we see prices drop to support levels around 2650 if that happens? Or, I mean, we got a new bottom here.
First, anything is possible. I'd rather see $2,500 gold and peace coming to fruition. I suspect that any resolution will have an impact on gold short term, but I don't believe it's going to change the destined path that we're looking at, simply because the conflicts are really widening. We're not getting them closer to resolution. In Russia and Ukraine, there's talk about the Koreans sending North Koreans entering the mix. In Israel, it has expanded to borders, and it's just a scary time. We want peace. Everybody wants that. But would it affect the market? Could it take it down? Yes. Do I think that's likely? I don't. I wish I could say different, but no. I think that aside from an actual ceasefire in either of those conflicts, they haven't played out.
Yeah, well said. Okay, well then when we talk about the Fed, because we've been talking about it, Gary, most of the year, I mean, we had the central banks, of course, we kept hearing from Jay Powell, and now the Fed is signaling rate cuts, but maybe at a slower pace than expected. So do you think that will be a favorable environment for gold futures here? Or how do you see this aligning with the technical setup you're monitoring, particularly if they come in and say, okay, it's 25 basis points, or what if it's none?
Here's the thing about what the Fed's doing. I believe that their intent is to reduce real rates, Fed funds rates, by about a percentage this year, maybe only 0.75%, but inevitably to take it to 3 to 3.5%, normalize interest rates at some point next year, possibly 26, but they might get it done next year is my best estimate. The pace at which they pull these triggers is not as important as the fact that they have signaled that they will normalize rates. So whether they don't do another jumbo rate, which is pretty much out of the market in terms of the probability, that's good. That's healthy. We want to see rates slowly contract. We want to see the economies revitalize themselves and get healthy labor markets here as well as in Europe. And that's what's important. It's not going to be whether or not the Fed cuts rates by X, Y, or Z. It's we are here and their target is 3.5. The timeline to get there, that's what counts. And I don't think that aside from big changes, economic issues that they haven't dealt with or haven't seen coming, that's going to change their plan. So I think the fact that there is talk about the Fed slowing down the rate cuts, that's fine because they're still committed to normalizing rates. And so smooth is better in this case. I don't expect them to deviate from the track of 3 to 3.5% by mid to the end of next year.
Okay, well said. Interesting. I mean, very bullish on gold here. Obviously, $28.65 to that $2,900 outlook, as you said, by Q1. I want to chat quickly to you about silver here, Gary. I mean, it's been a strong run. 12 years you've been waiting on this high. From a technical perspective, December silver futures are trading above that $34 mark. The next resistance set, what, around 35? Do you see silver's momentum continuing here?
You got an hour? Let me put it this way. When we look at the chart on the screen, each candle represents 2 weeks. So we're looking at a extremely long-term view. We're looking at the point in time when we saw silver above $50. That's when gold first hit 1900. This long line down to the end of 2015-16 is the correction that occurred with silver, and in gold. Gold was sitting at about 1,020 right in this period. And when you look at what happened recently, it ran out of steam. And so we were getting points even when gold was making all-time fresh highs. Silver couldn't get out of its way. The breakout on Friday, I believe 6.5%, took us right to this area just above $33. Now, to a market technician, when you look at the areas it has surpassed all of the major areas of potential resistance up to April 2013. And you've got a good amount of history with showing that this area taken out will really energize this market, and the potential for silver, in my eyes, by the end of the year, $41. End of this year, first quarter, $42. That's a huge change from what I was looking at even 2 weeks ago. We hit a major milestone when we broke above this technical level last week. And that's key because look at it's taken everything out. And so it's kind of like clear skies out there, and there's plenty of room for silver to run. Absolutely.
Okay, so $41 on the silver front. I was talking to some analysts and they suggest that the ETF flows haven't really picked up significantly. We talked about this with gold prices last year when we started to see the retail consumers come into the market. But I'm curious, would we see a consolidation or maybe a pullback in support around 33? What I hear you're saying is we're going to see the cyclical highs and then, of course, some profit taking, some cyclical highs. But eventually, I guess it's that $42 level or 40?
Well, what I'm saying is the price that we are currently at is a key and critical point. The breakout took us right to this area. Incremental moves above this, say 34, 35, really signals that there's not major resistance till $40, $41. It's just not there. And there's been so much energy building up in silver because it hasn't moved. It has not kept up with gold. And why that happened is a mystery. I'm not going to attempt to even postulate an answer, but what I can say is on a technical basis, the breakout that happened last week is significant and should give silver the ability to quickly and possibly parabolically move to $40 per ounce.
Okay. Well said. Okay, well, before I let you go here, Gary, you previously highlighted that the political uncertainty around the U.S. election, could play a major role in driving safe haven demand for gold as we continue to see. But, I can't believe we're going to say that we're almost nearing the election. I feel like I've been preparing for it all year, but it is fast approaching November 5th. I'm curious, up until that point, are you expecting to see lots of volatility into the market with this political game?
This is an important election. I try not to talk about politics, but there is a key difference as to who wins. And the key difference is how the United States looks at itself as a world partner or a more isolated, let's say. And so the election matters. And the outcome of the election, either way, will define history going forward for the next decade, because it's going to be very different leadership styles as to our strength with NATO or our difference with NATO. We'll have to see. It's getting close, and I have no idea who's going to win. I just want to see everything work out in a peaceful way, and that's the best we'll get.
Yeah, well said. Well, at least we know that gold has got some new record highs here and still some room to grow, even on the silver front. Okay, Gary, thank you for this. As always, we appreciate it. I know that you got a special offer for our viewers too.
Yeah, thanks. We want to recognize the loyalty of our Kitco viewers. Anyone that goes to our website, signs up for the premium service, you put Kitco in a coupon box, it's going to give you 30% off.
Yeah, done. We appreciate it. Thank you for that. And I hope you are well, my friend. I know that you're back on your feet, and it's always good to see you. We'll look forward to this in a couple of weeks. Gary Wagner, editor of thegoldforecast.com, joining us from sunny Hawaii. Thanks, Gary. Appreciate this.
Thank you.
Thank you. I'm Jeremy Saffron for all of us here at Kitco News. Thank you for tuning in. Of course, we'll have much more this week, including coverage of that BRICS conference happening. Stay tuned. We'll see you next time.